Imagine a market where you can literally buy a home on the water in Noosa for 30 cents in the dollar, or a market where you can buy the world's best stocks for literally 50% of the current price. Or you could go and pick up some gold and some silver and literally double your money in a 4-year period. Now, I know these sorts of returns and these sorts of ideas sound absolutely crazy to the normal investor, which is why in today's video, I'm going to explain exactly how the smartest investors in the world absolutely crushed it in the last GFC, and how you can put yourself and your family in the best possible position no matter what sort of market we're coming into in the next 5 years. Now, the first thing I wanted to explain today is what a GFC style environment actually looks like. Now, throughout history, this has been labeled many things: global financial crisis, recession we had to have, or something like the Great Depression. But all of these markets have one thing in common, and that is massive amounts of panic, massive amounts of fear, and massive declines in asset prices for a short window of time. Now, in the last GFC, house prices in Australia went down by about 8% in Sydney and Melbourne, and about 12% in Brisbane and Perth. Now, unfortunately in America, house prices got absolutely smashed. In fact, in the last GFC, they went down by as much as 35% in many of the capital cities and regional markets throughout the country. On top of this, in a market like the last GFC or the Great Depression, stock prices, whether that's the ASX market in Australia or the S&P 500 market in America, generally go down on average by about 35 to 50% according to the great Phil Anderson. Now, these styles of markets only come through the economic system about once every 16 to 20 odd years. And while they were absolutely brutal for over-leveraged and uneducated investors, they create a once in a lifetime, maybe twice in a lifetime buying opportunity for people like yourselves that are ahead of the curve and ready to go when the time comes. Now, the first idea I wanted to share with you in terms of how you can potentially double your money in the coming GFC is through the Australian property market. Now, Australia is not one massive market that all does the exact same thing at the same time. Now, as we enter the next GFC, it's really important to know that some assets are going to be massively overinflated and others are going to be extremely well priced or potentially even undervalued during that time. Now, an example of this was properties in Noosa that were selling for $3 million on the water in 2007 were being resold by the public trustee or the major banks for as little as $600,000. Now, what happened during that time is so many of the people that speculated on the Sunshine Coast market leading up into that last GFC overpaid for properties at the top of the market cycle, or got themselves or their businesses in tricky financial positions during that time, and they were forced to sell the properties. Now, in any normal market like we're in at the moment, there'd be a new buyer for that property and strong demand because the banks are lending money. But in a GFC style market, the banks stop lending money, people are shit scared, and people stop buying. And so some of these incredible properties that were bought for $3 million in 2007 were selling for as little as $600K through the public trustee or directly through the banks by 2009 to 2010. Now, the same story is true for some of the best markets in Australia, including St Kilda in Melbourne, Fremantle over there in Perth, or the beachside suburbs in Adelaide. Now, what's crazy is that 15 years down the line, those properties that were picked up in Noosa for $600K are being reselling for as much as $5 million in 2025. Another example of this is when I first started as an investor back in Sydney and the central coast of New South Wales back in 2011, at the end of the last GFC, I was literally going to open homes every single weekend with about a $400K budget. Now, at that time, I was able to find units in Sydney for that price, incredible homes on the Central Coast, or incredible homes in Wollongong for under $400K. And what I noticed is that nobody else at that time was showing up to the open homes. Now, the thing that's important coming up a level to understand as we enter this style of market is they don't last forever. In fact, most of the buying and most of the best buying in these sorts of markets is done while there's the maximum amount of fear and the stock market is still coming down. I think the last thing I wanted to touch on about the Australian property market is it isn't just one big market, and during a GFC, there'll be winners and losers as well. Now, the second way to potentially double your money in the coming GFC is through the stock market. Now, regardless of which market in the world that you focus on, whether it's the ASX in Australia, the S&P over in America, the NASDAQ, or the emerging markets throughout the world, About once every 7 to 10 years, we get an environment where the market completely shits itself. There is a massive sell-off and a once in a 7 to 10 year buying opportunity. Now again, in the last GFC or the Great Depression, we saw the stock market drop by as much as 35 to 50% on average for a small window of time. Now, what's important about that, for the last 100 years of history in these markets, they've always recovered extremely well within a 2 to 4 year period. Now, if we look back at the last GFC and how the stock market performed over a relatively short period of time, now if we look back at December 2007, the S&P 500 was trading at a level of about 1,500. Now, just 15 months later, by February 2009, that level had dropped to just 735, which is effectively that stock market during that 15-month period of time halving in value. What's crazy is when you look at the longer term charts, again by October 2012, it was back up to almost 1,500, which meant that if you had have been able to buy the bottom and you could stomach it in the last GFC in that February 2009 market, that within a 3 to 3.5 year period of time, you would have doubled your money again. Now, what we focus on here at Pumped on Property is the property market in Australia. I'm becoming more and more personally interested in stocks as this once in a 7 to 20 year opportunity comes up again. Now, my personal investment strategy at that time, not thinking that I'm going to be able to pick the number one stock in that entire basket of goods globally, is just to simply go out there and pick up the S&P 500 or the ASX 200 in something like the iShares or the Vanguard index funds. Now, I picked up that information from Money Master the Game by Tony Robbins, Principles by Ray Dalio, as well as the Barefoot Investors books. And based on history and their analysis, an incredible buying opportunity could be coming up relatively soon again. Now, the third and final idea that I wanted to explain today about how to potentially double your money in the coming GFC is around the commodities market, particularly the gold and the silver markets. Now, again, I'm not a gold or a silver trader by any means, but what I have been doing over the last 5 or 6 years is looking at the longer term charts and the longer term fluctuations in prices in these commodities over time. Now, if we go back to July 2007, gold was trading at about $670 per ounce. Now, just 4 short years later, by July 2011, the price of gold had gone up to almost $1,860 per ounce, which meant that if you were lucky enough to buy early for around about that $600 mark, you would have effectively tripled your original investment. Now, the story is an extremely similar one for silver during that 2007 to 2011 market. In fact, in July 2007, silver was trading at just over $12.50 per ounce. Now, again, just under 4 years into the future, by March 2011, the same silver was trading for $46.50 per ounce, which is unbelievable, which again means that smart investors during that time that were able to take that calculated risk did better than tripling their money over a 4-year period. Now, what's extremely important in the silver and the gold charts to look at is once confidence returned to the market, the prices of those two commodities went through the floor and they were massive declines. So it's an extremely volatile and riskier investment that people use as a hedge against inflation or against really uncertain times like a GFC or a Great Depression, and there is a massive sell-off of that asset after confidence returns to the other markets like property or stocks around the world. No matter which way you look at it, I believe there are incredible opportunities coming for savvy investors. Whether you're into property or a combination of property, stocks, gold and silver like I am. Now, whether you read the works from Phil Anderson, who forecast the last GFC years in advance through his book, The Secret Life of Real Estate and Banking, or you subscribe to the thinking of the great Fred Harrison, a UK economist who wrote The Power of the Land and Boom Bust, who forecast the financial crash leading into the 90s market, or who also forecast the crash years in advance before the GFC. Both of these economists, investors and authors have been on camera recently saying that we are now within 12 to 18 months of a very severe financial environment which will wipe out many people's wealth positions, but also give investors like you that can see it coming in advance an incredible opportunity to get ready and to take advantage of that once in a 20-year market. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just want to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.